Welcome back to Decentralized News. So today we are going to be talking about whether it is safer to save your money in Bitcoin or in a bank. So that is the very question that we'll be answering in this video. You don't want to miss it. We'll be discussing how you can hedge against bank failures and also safeguard your assets. And we'll also look at the case between Bitcoin and the dollar, and also self-custody and banking. So we'll be looking at the different perspectives on how we can preserve our purchasing power, and whether saving in fiat is better than saving in Bitcoin and vice versa. We'll look at the pros and the cons and so much more. So we do know that obviously during times of financial crises, which are pretty much reoccurring phenomenons in history, this is a time where we see sharp declines in value of financial assets such as stocks and bonds and currencies, and obviously these have significant implications for both the financial sector and the real economy, leading to real job losses, bankruptcies, and economic recessions. So with the banks all around the globe in turmoil as we speak, this is a very pertinent question to ask, whether it is safer for us to save our money in Bitcoin or in a bank. If you're interested in learning more, then stay tuned to the end of this video. Don't forget to give us a subscribe, like the video, and share the content as well. If you have any suggestions of what type of content you'd like to see on this channel, make sure you leave a comment in the comment section, and don't forget to check out our main site decentralized.news, and also check out the rest of the links in the description. But let's get started with our question of the day, whether we should be saving our money in Bitcoin or indeed in fiat in the banks. Let's go. So storing money in a bank means that you're entrusting your funds with a financial institution which is responsible for safeguarding and managing those assets on your behalf. So banks typically offer a range of services and products such as savings accounts, checking accounts, credit cards, and loans. And they also provide various security measures to protect those funds. These things can include such things as FDIC insurance, fraud detection, encryption, etc. So on the other hand, self-custody or non-custodial crypto wallets actually allow you to store your funds directly on your own devices or your computers without the need of a third-party custodian such as a bank. And this gives you full control of your funds, and it also eliminates the risk of them being lost or stolen by a custodian, which is something that we've seen happen, especially in this crypto space over the course of the last year, with exchanges such as FTX going bust. However, it also means that you're solely responsible for securing your funds, and this can be very challenging for other users being able to navigate non-custodial crypto wallets or platforms, for example. So one of the biggest differences between bank storage and self-custody or non-custodial wallets is the level of risk that's actually involved. So while banks are generally considered to be sort of relatively safe and secure, they're not immune to fraud, hacking, and other types of risks. In self-custody or non-custodial crypto wallets, on the other hand, are often considered to be more secure than banks, but they do require a higher level of knowledge and security awareness to be able to use them effectively. And another important difference is the level of privacy and anonymity that's actually provided by each of these options. So with banks, these are subject to various regulations and laws and require, these sort of custodial platforms to collect and share your information, especially your identity, your transaction history. For example, with self-custody crypto wallets, on the other hand, they do offer greater privacy and anonymity. They do require, since they don't really require that disclosure of information or KYC. So ultimately, the choice between storing your money in a bank and self-custody or non-custodial crypto wallets depends on a range of different factors, including your own personal preferences, your own risk tolerance, and also just your level of technical expertise. So it's also important to weigh the pros and cons of each option before you make a decision. So we really want to touch on the different perspectives when we're trying to answer the question of whether it's safer for us to save our money in crypto or in a bank. So that also depends on a range of different factors, including your risk tolerance, your investment horizon, your own preferences, of course. So we have some compelling arguments. Let's look at a few. So if you're looking at it from more of a strategic perspective, Bitcoin does offer the potential for high returns as a hedge against inflation, as its limited supply of 21 million coins come into play. So this limited supply, that means that Bitcoin is a deflationary asset, which makes it more attractive than fiat currency for long-term investing. However, with Bitcoin, it's also very highly volatile, subject to wide market fluctuations, and also it can result in significant losses for investors. On the other hand, if you're saving your money in a bank, does seem to offer you a little bit of safety, convenience, accessibility, as well as the potential to earn interest on savings depending on the interest rate environment at the time. However, these interest rates that are offered by banks are lower sometimes than the actual rates of inflation, which means that your savings will lose their purchasing power over time. So that's sort of if you're looking at it from a more long-term strategic perspective. If you want to just look at the fundamentals, Bitcoin and fiat currency are fundamentally different. Fiat currency is backed by government that issues it, and its value is pretty much derived from its use as legal tender. So Bitcoin, on the other hand, is a decentralized money operating on a peer-to-peer network, and its value being determined by the supply and demand in this network. So that's from a fundamental perspective. If you're looking historically, from a historical perspective, fiat currencies have a long history of devaluation and loss of purchasing power. So for example, with the US dollar, it's already lost 95% of its value since the Federal Reserve created it in 1913, or was created rather. So in contrast, you can look at Bitcoin, which has only been in existence for a little over a decade, and its value has increased significantly since its inception. So that's if you're looking at the historical perspective. Philosophically, obviously, Bitcoin does offer the potential for financial freedom and self-custody. With Bitcoin, individuals can actually control their own money without the need for central authority, such as a bank or a government. This can provide you with more control of your financial destiny, reducing the risks of government and bank interventions. Looking at things from more of a theoretical, mathematical perspective, Bitcoin's underlying technology, which is the blockchain, does offer the potential for transparency and immutability. Transactions on the Bitcoin blockchain are actually recorded on a public ledger that is immutable and cannot be altered. This can also provide a greater trust in the financial system itself, reducing the risk of fraud and corruption as well. If you're looking at just behavioral science, that perspective, both Bitcoin and fiat currencies are subject to human biases and emotions, of course. So, for example, individuals may be more prone to panic selling during market downturns, which may be influenced by groupthink or social influence or sentiment. As a result, it's important to carefully also manage your emotions when investing in Bitcoin or if you're holding other assets. So whether you want to save in Bitcoin or in fiat, also just depends on these factors. Now look at just preserving the purchasing power, and let's look at some of those dynamics. So if you're saving money in fiat, you can earn interest on savings in a bank account or fixed deposits, which helps to grow your wealth. However, inflation can actually erode that purchasing power of those savings over time, especially if the interest rate is lower than the inflation rate. So for example, in the United States, the inflation rate for 2021 was 6.8%, while the average interest rate on savings accounts was only 0.05%. This means that the purchasing power of savings would have increased by more than 6.8% if it was saved in a typical bank account. So in countries with high inflation rates, holding fiat currencies is even riskier, as the value of those currencies can rapidly decrease over time. For example, in Venezuela, the inflation rate in 2021 was estimated to be around 3,000%. So let's look at some of the risks of saving money in fiat. Inflation risk, of course, we've talked about that. This is something that, will affect the value of the currency, which can be eroded over time if they increase the monetary supply, and also if there are some geopolitical risks or some economic uncertainties. So currency devaluation, like we've talked about, banking risks, as we are seeing currently, this is already unfolding in America and also spilling to other parts of the world, as we've seen a lot of banks come under stress. And recently, I think there's some reports talking about, this is after the Silvergate, the Silicon Valley Bank, Credit Suisse shenanigans, but they're now talking about 186 other banks in the US that could be actually prone to also experiencing the same sort of risks. So this is something that you have to be thinking about if you're looking to save your money in fiat. When you're trying to save in crypto, of course, Bitcoin, Ethereum, other altcoins could offer a better alternative to fiat currencies. Some of them are decentralized, some of them have limited supplies. So that means that there's no a monetary expansion. So if we look, for example, in 2021, Bitcoin's price actually increased from around 29,000 to a peak of 64,000 in April before dropping to 30,000 by June of 2021. This level of volatility can be challenging for a lot of people. So that can also become something to consider if you're looking to hold your value in cryptocurrencies, that volatility. That's why it's always better if you have a longer term horizon. So there are those volatility risks, cybersecurity risks as well. Cryptocurrencies are stored in digital wallets, makes them vulnerable to cyber attacks, hacks, phishing scams examples. So if your wallet gets compromised, you might lose your money. Regulatory risks are also something to consider. In a lot of places, there's crackdowns against the uptake and adoption of cryptocurrencies. So preserving your purchasing power in fiat currencies, you can invest in other assets that can offer you a return that is higher than the inflation rates. For example, if stocks and bonds and real estate is offering you a return that can beat inflation over time, it might seem like a good option. According to a report by Credit Suisse, which is obviously now under stress itself, global stocks have generated an annual global averaging annual return of about 5.2% above inflation since 1900. So investing in assets does come with risks. All of these things have to be considered. So let's now talk about whether it's actually better to keep money in Bitcoin or in a bank. So let's look at some of the pros and cons. Obviously with Bitcoin, high potential returns. As a pro, decentralization, meaning there's no central party failures, privacy, diversification. These are all points that can be argued to be pros for Bitcoin. As far as the negatives there, the high risk, the security compromises that you might be faced with if you're not careful, limited acceptance in terms of where you're able to spend your Bitcoin, and also just regulatory uncertainty. Some of the things that you have to consider as cons. So with banks, like I said, safety, if you have insurance such as FDIC covering your deposits, convenience, it's easier to, pretty much transact since the banking infrastructure is more widespread and interconnected globally. Accessibility and regulatory compliance as well could be something that you might feel favors more the banking infrastructure. But as far as the negatives there, then, you're looking at low returns when there's low interest rates, fees as well. Banks do tend to charge a lot of maintenance fees, overdraft fees, ATM fees that can actually eat into your returns. Also, limited privacy. You have to make so many disclosures when you're dealing with banks in terms of your identity, your transaction history, something to be really wary of as well. So inflation risk, which is biggest threat to a lot of fiat currencies at the moment. A lot of the nations under stress, devaluating their currencies by printing more money. Now let's just touch lastly on how you actually can hedge against bank failures that we're seeing going on at the moment. So one way you can do that is to have self-custody crypto in your own portfolio, meaning that you have your own private keys. You don't rely on a central party. You don't store your coins on an exchange, for example. So that's one way to just kind of hedge against that risk of losing your assets. In the traditional banking system, there's systemic risks associated with liquidity issues. So this can be bank runs on depositors. We're seeing a lot of banks come under pressure as depositors are looking to take their money out. And this can lead to bank failures, and this can also lead to just systemic risks and a contraction in credit. So also, in contrast, the liquidity in crypto markets, particularly in DeFi, is more resilient during times of crisis. DeFi platforms do use smart contracts to execute financial transactions, which are automated and trustless. And this means that there are no central authorities restricting access to funds or freezing assets. As a result, DeFi platforms are more resistant to liquidity shocks. They're more dependent since there is no single point of failure. However, it's also important to still know that there are risks in DeFi. Smart contract bugs, hacks, cyber attacks could lead to losses of your assets as well. Still, the market is still highly unregulated, which can also pose some risks. So in conclusion, just having self-custody crypto in your portfolio is a way to hedge against bank failures. It eliminates the risk of losing your assets to financial institutions in the case of liquidity crunch or a default, things of that nature. While the liquidity in crypto markets, especially in DeFi, is more resilient, you also need to safeguard against it. So I hope this video has sort of given you some real good points on helping you decide on how much you want to save in fiat and how much you want to sort of save in crypto, just to be able to keep that good balance there. If you like this type of content, make sure you smash that like button, subscribe to the channel. Don't forget to check out the links in the description. If you want to trade, I recommend definitely using a decentralized trading platform like G-Trade, Gains Network, which is the link is in the description. If you want, you can also use GMX. The link is in the description. Also, head on over to our main site. Decentralized.news has the best cryptocurrency exchange reviews, DeFi platform reviews. If you want to understand all things crypto related, this is the place for you. We do comparisons of all the crypto cards that you can get, all the exchanges that are there in terms of what fees they charge, what sort of products and services they offer. Also, the different types of cryptocurrency wallets that are out there. We've got guides, reviews, trending stories, news, and a whole lot more. So make sure you go to our main site. If you want to know more about asset tokenization with blockchain, make sure you check out the links to my books, Tokenized Trillions, Blockchain Applied, links in the description. Till next time, peace and love. Like, share, subscribe, turn on the notifications. I will see you guys soon. Peace.